every expert agrees that short sales are going to be ramped up again, just like foreclosures, because of the fact that a lot of lenders and the government gave leeway for people not to pay their mortgages during the pandemic, but all those monies are going to become due. And if you didn't save your money or you can't make arrangements with a bank, then your property is going to go into foreclosure. And before it goes into foreclosure, you might want to try to do a short sale.
Welcome to Farley and Ferry's 10th edition of Ask the Expert. Remember, your success is always our focus. And today we're bringing you our expert, Edgar Parra, to discuss short sale transactions. So the marketplace is extremely busy and there's multiple offers on properties, but keep in mind, we still have short sales happening and opportunity. And it's so important that the general public understands the exact short sale process, because it's very common and it happens, and it's a tool to acquiring properties and selling them in the same manner. And here, without further ado, is Edgar H Parra. Edgar has been with Farley and Ferry. He is a very cherished associate. We've been together since 1995. He is bilingual. He is a dynamic salesperson, and one of his expertise is on short sales. So Edgar, can you please start us out on some of your experience with short sales in the current marketplace?
Yeah, hi, how are you? We started back in, I started back in 1990. I started doing short sales in about 2008, 2009, probably around 10 years ago, a little bit more. It has changed a whole great deal, but what we found now, it's with experience, it seems to be a lot easier than when we first started doing the short sales. Basically, what a short sale is where you sell your property for less than the amount due on your mortgage. Okay, we get banks to accept less than what is owed on the mortgage. And that's mainly our job. We always do it with an attorney, so we have a backup of an attorney. And, it's a whole lengthy process. And nowadays it's a little bit shorter than it used to be. It could take, back in the day, over a year. Then it went down to 6 months. Now it could be done in 30 to 90 days.
That's excellent. So it's really moved along quickly and you can expedite the transactions, because I can remember having, lines of people in the office just waiting to meet with you. And now that things are moving so quickly, it's just really an advantage.
Yes, and it is. And what happens is it's not for everyone. In our business, we have a lot of headaches. So it is very paperwork consuming. It's something that we had to try many times before we get it right. And it's not for every buyer and it's not for every seller. So, it's just like a niche in the business, basically. And by the way, what happened with the pandemic, every expert agrees that short sales are going to be ramped up again, just like foreclosures, because of the fact that a lot of lenders and the government gave leeway for people not to pay their mortgages during the pandemic, but all those monies are going to become due. And if you didn't save your money or you can't make arrangements with a bank, then your property is going to go into foreclosure. And before it goes into foreclosure, you might want to try to do a short sale.
So Edgar, if I'm a seller and I'm getting concerned that I paid, a certain number for my property, and I'm worried I'm not going to be able to make the mortgage payments and the value isn't comparable to what I purchased it for, what would be the first steps to consider a short sale?
Well, there's two ways. Like you said, there's two ways to do it basically. One is if you can't definitely afford your mortgage. You don't have much of a choice but stop paying. At which point it affects your credit, and basically, once you stop paying, it not only affects your credit, but you're going to make a decision where you can no longer afford the house. The first thing you do is you always reach out to the bank or reach out to a real estate agent and say, I'd like to sell my house. It's probably worth than what I paid for. I can no longer make the payments, and then we would try to take it from there. We have a packet that we use to identify what kind of a short sale it is. At the same time, there's another kind of another kind of short sale, which is when you are current, you can afford to make the payments, but the property is just not worth to you anymore because you overpaid or because you simply it doesn't work for your needs anymore, and the bank doesn't want to give you a reduction on the principal, so you have to do a short sale.
How severe does the short sale affect my credit in comparison to a foreclosure?
Well, one of the advantages of doing the short sale, it's that it's a temporary hit on your credit report, as opposed to a foreclosure, which is more permanent. Every lender, every attorney will advise you to try to do a short sale before the property actually goes into a full foreclosure. Most properties most lenders will start a foreclosure, but before it goes into short sales or gets the final judgment of foreclosure, you have time to do this short sale. It really affects the credit temporarily. I know people that have bought houses within 2 years after doing a short sale. I know clients that had gone from a 500 credit score to a 700 credit score within a year. So if you keep up paying your credit cards, your car payments, every other facet of your credit, then your credit report should go, or your credit score should go up.
Is there specific paperwork that I need to reach out to you for if my intention is that I better short sale my house?
Yeah, there is definitely a set of paperwork that, depending on each lender, they have their own packet that has to be filled out. Most times it would include that you submit bank statements, maybe last year income tax, pay stubs, all the financial information that you have, a reason for the hardship that you had. Let me think. It's just kind of like a mortgage application, but now we're doing it for short sales. So, and like I said, each lender has their own guidelines and their own packets that you got to submit with that. We take care of doing all the paperwork for the client. Once the bank starts requesting additional paperwork, then we'll do the same thing with our clients.
That's so significant, because I think that many of the times when someone's getting ready to enter into a short sale transaction, that it's almost emotional, because maybe they're attached to their house, they had a commitment to the bank, they feel uncomfortable. So it's really huge that your team is there to provide guidance for someone who's working to finalize a short sale.
Well, we recognize that it's a very stressful situation, and sometimes it's very uncomfortable. A lot of people don't want the credit to go down, or the score credit to go down. A lot of people don't even want to tell their neighbors that they're short selling the property. So it is an uncomfortable, it's a situation that nobody wants to be in, but sometimes it's the best way out. Sometimes you have no choice. Bottom line is, if you can afford your mortgage payment, if your house is worth whatever you pay for it more, then you have no need for the short sale. But a short sale is just a way to help out people that are in need and want to avoid a foreclosure.
And now, once the property is listed for sale and it's noted that it's short sale transaction, I've noticed that sometimes there's an approved short sale, and then other times the situation unravels that the short sale has not been approved yet. Can you explain the difference between those two scenarios?
Yeah, unfortunately, it has to do a lot with the lender that you're dealing with. And furthermore, it has to do with the agent that represents the lender, or what we call the asset manager. Bottom line is like in any other business, if you find good people to work with, then you'll be successful most of the times. If it makes it hard on the other end, then it's a hard transaction no matter which way you look at it. But we also find out buyers are not patient. So a buyer on a short sale has to be very, very patient. Because like you said, sometimes lenders want to agree to a price right away. Most times they don't. Most times it's a negotiation, just like any other real estate negotiation, where we go back and forth with the lender to see what the minimum they're willing to take. So it turns out to be just like any other real estate negotiation. It's just now you're dealing with the bank on behalf of your seller.
And on the other end, for a buyer, it can be a real opportunity to find a property that needs to move quickly. If a buyer sees the property listed in the multiple listing service and they reach out and there's already an offer on the property, how is that handled?
Well, on the buyer side, the key is having patience. I found out over the years that you can make a better deal on the buyer side on a short sale than you even do on foreclosures. Because on the short sale, the bank limits the offers to one person at a time, as opposed to in a foreclosure where you can have multiple offers. Okay. The other thing is, on a buyer side, if you have patience, okay, you can go through the whole process of going back and forth in numbers before anybody else does. So because you're controlling the property once the property goes under contract, basically but the key is sometimes it takes, with banks, it takes a lot longer than a normal negotiation with any other realtor. Okay, so it could take 3 to 6 months of negotiations, and that's where it takes the longest of the times. It's not guiding the paperwork. It's not, the bank has to send out an appraisal for the property, and then the rest of it just basically negotiating between what the buyer is willing to pay and what the lender is willing to accept.
So if I am a successful buyer and I have the property under contract, then it actually kind of puts me in first position to try to negotiate and close the short sale. And then what if there's other offers? Are they held as a backup, or how do you handle those other offers?
Correct. On most lenders, and you're only allowed to submit one offer at a time. So it basically goes to whoever can put the property on the contract first. Whatever buyer can get there first is usually the one that has the first right, basically. So every other offer, you continue to market the property, but every other offer, every other buyer is a backup buyer, is a backup offer, just in case the first buyer does not want to go up to whatever the bank requires to satisfy this loan.
So if you're a successful buyer, does the bank require certain documents to confirm that your financing is in place, or are there specific documents that the bank will want as the possible final purchaser for the property?
Correct. The other good thing with buyers is after they put their initial deposit, okay, all they have to do is sit back and wait. All they need is proof of funds. So whether it be a pre-qual letter from the lender or it's a bank statement or a retirement account, any proof of funds that they can show. That's all they have to, do for a lender to prove that they have the means to buy the property. After that, it all relies on the attorney, the agent, and the seller to submit all the rest of the paperwork. So on the buyer side, it's really easy.
Well, that seems very fair, sure.
Yeah, it is very, very easy on the buyer side. What I must find, it's buyers lose patience. But if you have patience, you could probably make the best deals around. Like I said, I will buy a short sale before I will buy a foreclosure or a property on the market, because I know I'm probably going to make a better deal on that property right now.
Since the mindset in the near forecast is that there will be more foreclosures based on unemployment and loss of jobs and more short sales, do you have any thoughts for the upcoming months, how you should search for short sales, or they just come on the market randomly, or is there a list out there, or do you need to go through MLS? Do you have any thought process there?
Well, what happens is, once again, what I found out over the years is a lot of buyers and a lot of real estate agents are afraid of even doing the short sales or having your buyer look for short sales because of the time and the headaches that people have heard about. I think if you have a buyer that is patient, if you have a buyer that is qualified, and if you have a buyer that really wants to make the best deal possible, I believe short sales is probably better than any other way to go. Now, how do you find these short sales? There's a number of ways, but the most common way is obviously to the MLS system. Okay. Now, for us, it basically becomes for realtors. It becomes to anybody that it's late on a mortgage, or it's going to be late on a mortgage, or basically it's underwater, it owes too much on the property, and it's never going to go back to the amount what they owe on the mortgage. Then we should advise them to start a short sale, because the other options are just not that great. Okay, this is definitely the best option for most sellers, and like I said, and it's a good option for buyers that want to be patient, that have the time, but they eventually want to make a good deal.
What I find is so intriguing about this is that for the sellers, basically by entering into a short sale, they get some financial and emotional relief. And then on the other end, for the buyer, it becomes an opportunity for them. And, also relief that now they have a new property to reside in or an investment. And both can move forward with like a peace of mind that, they've got the best transaction. They did that. They made the best possible decision in regard to the bank. So it's really quite an important decision.
Well, that's correct. What I call is a win-win situation. It's a win-win for everyone involved. On the seller side, your credit is not as affected as if you had the foreclosure. You get rid of a big headache, which is that big loan amount that you couldn't afford. Okay, you could buy again within 2 to 3 years, depending on the lender. And most times we're able to do what is called a seller's incentive or seller's relocation, where the lender is willing to give anywhere between $3,000 to $5,000 up to $20,000 in relocation or incentives for the seller to sign this short sale, or to go through this process. So at closing, the sellers can actually, most times, they're actually walking our money. The whole loan is forgiven. So it's not like they're gonna have to come back and be responsible for whatever remaining was. Not anymore. Whatever the balance is, that balance is forgiven. So not only they're getting rid of that big loan or the big debt, but they're getting relocation monies, they're getting incentive money. So most sellers are walking out of closing table with a check. For the buyers, like I said, it's on a normal transaction, okay, if you can get a property $10,000-$20,000 lower than the market value is, you're doing a great deal. On a short sale, you could go up to $100,000 lower. I've seen short sales go for $100,000 lower than market. So if you're patient, like I said, you could have the best of both worlds.
And I think what's really important to note is that if a seller is getting ready to consider the short sale process, they shouldn't feel uncomfortable about it, because it's really just a matter of doing business. It's not, it's not a huge loss to them. It's just a more comfortable way of moving forward, to their next property or changing their situation. So, they do have a peace of mind.
Well, there is always that stigma related with doing a short sale. Just like there's a stigma related with having to lose a house on a foreclosure or not being able to pay. But, basically you're doing the best thing that you can under the circumstances. You're going through the best avenue that you can take. Mm-hmm. And by the way, lenders also win, because lenders do not want these foreclosures on the portfolio. So lenders, is to their advantage to accept or negotiate a good short sale. Okay. They get a bad rating just like we do on a foreclosure. So like I said, it's a win-win situation for everyone. The properties don't get, on a foreclosure, it takes a lot longer. So these properties, sometimes they become vacant, people abandon them, the neighborhoods go down. On this case, most properties, the seller can leaving the property until the day of closing. So there's a whole ramifications of why a short sale is a lot better than a foreclosure.
Well, I thank you very much for your time. Our expert of the day, Edgar Parra. This is just a win-win situation, as you would say. So I think if we have any clients out there who have any questions about short sales, our expert is here, Edgar H Parra, and we are just so delighted to work with you today. And thank you very much. Super informative, very, very important information.
Thank you. Stay safe, stay healthy, and it's been a pleasure over the years.
Thank you. Adios.
Have a good one.